Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking gold, and gold is up. Monday, we saw gold rally. Obviously, heading into the weekend with a lot of up in the air news, whether it's geopolitical risks, whether it's hedge, whether it's what if. We did see gold creep higher, and then in the overnight trade coming into Monday, we saw gold touch very close to 1,300. We're very close to those pre-election U.S. election highs, and so the market kind of is finding itself here. We did trade off those highs. We did see a little bit of a sell-off as sort of the markets breathed a little relief that there was no that the issues didn't expand and we didn't see more controversy. But still, gold is elevated. Gold remains a signal that all is not well, that there is still a lot, we have a lot further to go than just one holiday weekend to get past all the issues that we see around the globe. And if you look at some of those issues, let's start with North Korea. Obviously, there are plenty of issues there and plenty of risks and rising risks between the leadership of North Korea, whether it's the U.S. and China, whether it's the rest of the world. There's still going to be some friction there, and I think gold is reflective of sort of a fear trade there. Likewise, what we see in the Middle East. You see definite friction, and I think that gold is a reflection of that, and that is the fear trade that we haven't really seen in gold. Gold has been rallying, really, if you go back to March FOMC just over a month ago, we've seen gold rally about $100, and it hasn't all been a fear trade. There's been some dollar trade, there's been some Fed trade, there's been some economic trade in there. This is, I think, a lot of this last move in gold has been derived from fear, and it's really only going back about a week and a half. So when we talk about the pullback, you're taking back some of the fear, but you're not taking back the trend that we've seen. And if you look at the gold where it is versus where the Fed is saying rates should be, you look at a different picture because, like I just said, the last $15 to $20 in that gold move was fear, but that first 80 was really all about the Fed not being able to do what it wants, maybe the economy being weaker, growth being absent. And I think that right now gold is a good hedge against equities because as equities stay on the highs and gold rallies, it suggests that they're moving tandem one and the same because you're buying gold as defense because you don't want to sell your stocks. Certainly not don't want to sell your stocks in the midst of what could be another good earnings season or even a so-so earnings season. We don't need much to keep stocks from going higher. And I think that right now gold is going to maintain its bid based on the fact that the uncertainty in equities, the uncertainty of the Fed, and the Fed right now wants to raise rates 2 more times in 2017. That seems like a long way off, and we're starting to see that in the June meeting, starting to pull back some of their expectations of a hike, and that's only going to push gold higher. So gold 1,300 is we almost got there. I still think it's well within the realm of possibility that we get there even without the fear trade. And I look for gold to continue higher. On any pullbacks, you're going to probably see some decent buying because as we pull back, it's only going to feed into equities, and as equities go up, gold will go up as defense. This has been Todd Colvin coming to you from the floor of the CME Group.